Good morning, everyone. Thank you for joining us. My name is Lisa Lashendro. I am one of the annuity marketing directors here at Insurance Agency Marketing Services. So glad to see so many folks join us this morning. I see a lot of familiar names and some new names I have not seen before. So for those that have joined us before, welcome back. And for those that are new to us and this is your first webinar with us, I want to thank you for your time as well, and welcome. Um, it is 10 o'clock, so Central Time, so I do want to get rolling here for the sake of respecting everybody's time here this morning. And today we have Tia Stanley, the Sales Vice President with North American, joining us. A little background on Tia. She has been with North American for 5 years, probably going on 6 now, wouldn't it be?
Yep, you got that right.
Yep. But she's been in the insurance industry for over 13 years. She's heavily involved with NAFA, the National Association for Fixed Annuities, and is the acting chair at their education or for their education committee. Her high energy approach towards developing relationships, presenting sales concepts, and her commitment to the industry have been a huge key in helping partners grow their business. So we're really excited to have Tia back with us to go over some things here at North American and how excited we are to be one of their key partners. So before I hand it over to Tia, I do want to go over some things about us here at IAMS, just for those of you that are new to IAMS, and I want to give you kind of a 10,000-foot view of some of the things that you have access to while you partner with us. So with that, I'll get rolling on that. Um, First off, I want to let you guys know that we have new producer builders programs here at IAMS, because we want you to get off on the right foot with us, and we want to make sure that we are building your business for you and helping you do that. So in the first 180 days or 6 months, you have certain levels of production that you hit, and we're going to give you a little something, something back to help you continue to grow that business. Or if you just want reimbursed for marketing that you've already done, we have cash reimbursements for that as well. So I'm not going to go over every single one of these, but keep in mind at each of these different levels, you have, certain items that you can pick from, whether that's cash, whether it's an iPad or mailers or seminars, boss radio, whatever the case may be. Do let us know when you hit one of these levels if there is something that is not listed as an option here. You got to let us know, because we definitely think outside the box, and we don't want you to take something that's not going to really help your business. We want to provide value to you and a partnership for you. So if there is something else that you're working on, whether it's maybe a Facebook campaign or something like that, that we can help you with, let us know. We love having those conversations. We also have our referral producer program. You like referrals? Guess what? So do we. So we have our referral producer program. You can go about this several different ways. If you want to start an agency, we have programs for that as well. So anytime you have a referral, be sure you talk to um, your marketer, and whether it's on the life or annuity side, and we'll be sure we get you that information and get you rolling on that, so you're set up and your referrals set up so that you can get reimbursed for that. This is one of my favorite topics to tell folks about. Hands down, we have some of the best back office support in the industry. We have anywhere from, case design assistance, forms at your fingertips. We have a very experienced sales staff, as well as our staff on the new business side, to help you on the life cases, getting those through, annuity cases, going and getting those through, making sure your apps are scrubbed prior to going to the carrier, so that you don't have to go back to your client 3 times for updated signatures or whatnot. We pride ourselves on making this our back office support go as smoothly as we can for you, so that you can do what you do best and be out there selling. Let us do all the back office stuff for you. So keep that in mind when you think of IAMS. Next, I'd invite you all to be sure you go to our IAMS website. Here, when you get registered, you'll have, access at your fingertips to, quoting systems, forms, industry links, sales tools, all sorts of things, including Firelight. Firelight, we have a majority of our carriers on there. Firelight is one of the industry's leading programs for e-applications. So we want to make sure that we're able to provide that for you. If you are already contracted with IAMS and not yet registered on Firelight, contact IAMS, your marketer, or anyone here at the office. Would be happy to make sure we get you instructions to get on that. It is a much smoother process. It helps prevent some of the whoopsies on applications. So I would encourage everyone to be sure that they have the registration completed for Firelight. Here are some of the carriers that we have on Firelight. Like I said, this is just a small list to give you an example. We're constantly putting more carriers on there and updating. So Firelight's also a great way to make sure you have the most accurate forms, when you're dealing with the client. Next, I want to talk about our creative marketing solutions. Our creative team is another part of IAMS I love to brag about. I work with these guys every day, and with my producers that are contracted with us. One thing that we do here at IAMS is we want to talk to you about what value we can bring to you, not just what other IMOs or FMOs are out there doing and throwing things at the wall and see what sticks. We're gonna take the next step and chat with you guys about what's important to you. How can we help you build your business? How can we help you grow your business? And our creative team is very plays a very key part in that process. We'll drill you down with some questions: what's working, what's not working, in a marketing analysis kind of conversation. We'll take that back to our creative team, and they'll take a deep dive into it and come up with some solutions. So if that is something that you are interested in exploring more, or talking to us more about, give us a call, give me a call, let me know, and I follow up with you after this webinar, because this is a real big part of IAMS that really sets us apart from other competitors out there. So I want to make sure you guys are aware of that. We also have our retirement analyzer. This is something that we provide for our contracting producers that are producing business. So we take that expense off of your plate. This is an industry-wide program that a lot of folks out there probably recognize, and if not, we would be happy to explain this program to you. But it's a great way to be able to present solutions to your clients, show them where their shortfalls are, and be able to continue to update it and keep that in your database as well. Next, I want to make sure you guys all are aware of our IAMS Wealth Management team as well. Years ago, Charles and Steve, that we wanted to really be the one-stop shop for everybody. So whether you are already registered, or have your securities license, or do not have your securities license and want to make sure you're keeping your clients in your backyard and not having to refer that to another broker that might take the rest of the business, give us a call, let us know. We've got a team that can either help you with, placing a securities type business, or helping you, with licensing, or whatever it is you need. We're a one-stop shop for not only the fixed stuff, but the securities as well. So just keep that in the back of your mind as well, and let us know if you have any questions. With that, I'm going to hand it over to Tia. We do have our Facebook and LinkedIn pages. I would love to see you all connected there, so you can get the latest on what's going on out there in our industry. We keep it updated. We try to share valuable posts and things like that will be meaningful to your day. So before we get off the call today, I would encourage you all to go on and join us on Facebook and LinkedIn. And with that, Miss Tia, I am going to switch screens over to you and let you take it away. I do want to apologize. There was a typo on the invite. I believe it has 200% par. That is no longer the case. So I apologize for that. I'm going to let Tia go into that a little bit more and give you guys all an up-to-date standpoint of where North American is today.
Perfect, Lisa. I so appreciate you. A couple questions. Can you hear me just fine? Can you see my screen just fine?
I see your screen and I hear you.
Okay, roger that. All right, well, hey, I'm family. Thank you so much for tuning in. And like Lisa said, stuff happens, right? I feel like 2020 was the definition of, hey, stuff happens when it comes to different things where life throws you some curveballs. And you know what? That 200% par rate, we had that mid-year last year. Like most carriers, we have had a rate change since then. So like Lisa said, I will get into what those rates look like. But first wanted to take a little bit of time. Again, I'll give you a short intro on me, and then we'll talk about what you see on your screen. So again, my name's Tia Stanley, Sales Vice President here at North American, and I've got the distinct pleasure of being able to work with and support IAMS. You guys are working with IAMS because they've been around for a really long time. Isn't it wild to say that IAMS is older than most millennials, right? In fact, we could say that IAMS is older than most millennials, or all of them. But they've done a lot, they've seen a lot, they know how to work with you, and they know what matters to you. And it goes the same for North American. For North American, we've been around for over 130 years, you guys. And if you remember our old logo, I'll be the first one to say, well, our logo looked like it was about 130 plus years old. We recently had a refresh, and I absolutely love what we've done with the colors, what we've done with our logo, what we've done when it comes to that oak leaf that you see, or that maple leaf that you see on your screen. We have this strength and stability down pat. Just like these strongest, biggest trees that you've seen. It starts off, with a little seed, but it grows into something pretty incredible. And I feel like we've done that as a carrier. The last time that I was in front of you guys, that was during the Ascend event, the Ascend meeting that you guys had. I'm sure the first thing you'll probably think about for the North American presentation, it was Gary Woodland. He was absolutely incredible. And I had the pleasure of presenting with my counterpart, Andrew Herrera, on our life side. And I had touched base on VersaChoice and the first to market liquidity. And I wanted to tell you, today's presentation, it'll be on VersaChoice, but think about it like VersaChoice continued. We're going to go in a little bit of a different direction because I want you to have a deeper knowledge, not just on that product, but also other things that we're offering here at North American. So let's go ahead and go into the things that we're offering here at North American with my next slide. Wanted to tell you guys, when you are thinking of non-qualified stretches or inherited IRAs, I'm sure you will, the first thing or the first instinct you're going to have is you're going to call IAMS. And you're going to say, hey, what carriers accept this business? Because carriers have absolutely changed their stance, and they're few and far between on who will accept just one of those things, if not both. Well, North American is going to be your home. We will take non-qualified stretches and inherited IRA business. And I love how we have on the screen, why not give North American a try? If you haven't worked with us, this would be an excellent opportunity with your next non-qualified stretch case and inherited IRA business. And so I wanted to get into a breakdown of what we can offer to you based on those two categories. So let's talk about non-qualified stretches. You can see the bullet points right here. Really, when we're thinking of, the definition of that non-qualified stretch, wealth is distributed out in equal payments over the remaining life of the beneficiary. The account balance remains tax deferred. The payouts can be transferred to a contingent beneficiary in the event of a beneficiary death. Okay, so for non-qualified stretches, you're probably wondering, what are my product options? And you can see in bold for new business, non-qualified stretches available on Performance Choice 8 and VersaChoice 10, with or without that first to market enhanced liquidity benefit rider. Pretty cool, right? The only thing that I want to point out here is take a look at the last sentence. Non-qualified stretches only available for natural owners, not on trust, estates, corporations, etc. If you're like, wow, that's a lot of info and I can't memorize all that, you guys don't worry. This is verbatim on our state availability chart. We make it just as easy to read, and it's on the first page. So if you ever wonder, okay, what will North American take? Of course, contact your IAMS family for sure. Also trust that we have this listed on our state availability chart, and you can take a look at that at any time. So non-qualified stretches, you've got a home with us. Another thing I want to point out, which we'll get into, Performance Choice 8 and VersaChoice 10, they all have the same crediting methods because they're both built for accumulation. Of course, Performance Choice 8 being our shorter term accumulation play. To me, I love that because that makes it great when you're thinking about the simplicity of the North American product portfolio and knowing both of those products have the same crediting methods. So let's talk about inherited IRAs, right? These are designed for retirement plan beneficiaries. They provide continued tax-deferred growth, lessens immediate tax impact, right? That huge windfall, and no early withdrawal tax penalties, even if you're under 59 and a half. You'll see an asterisk there. Restrictions apply. North American does not accept all types of inherited IRAs under the law. What we mean by that is that Secure Act has a couple different, let me use my personal verbiage, a couple different spinoffs of rules on inherited IRAs. Those spinoffs we do not recognize. We just recognize the good old traditional plain Jane inherited IRA. If you have a question on that, again, feel free to contact IAMS, or you can call our sales support team because they get these questions all the time. So when it comes to product availability, rollovers, the date of death being on or before December 31st of 2019. Well, you've got our Charter Plus series, you've got our MIGA, which is the Guaranteed Choice series, Performance Choice 8, and VersaChoice 10. Now, those inherited IRAs, the date of death on or after January 1st of 2020, you'll notice that you've got our Performance Choice 8 as an option, and you also have our SPIA, that's the North American Income. So that SPIA, the 5 to 9 year period certains. So you'll see North American Income is only available on externally funded inherited IRAs. So again, wanted to make sure that I pointed out here for non-qualified stretches and inherited IRAs, North American's your home. And if you have any questions on that, our sales team here at North American is ready to support you along with your IAMS family. And one way that we support you guys is making sure that we've got this financial professional use only information on inherited IRAs and also non-qualified stretches. I'm going to make sure that Lisa has these brochures as soon as this presentation ends. That way she can share that with anyone that calls in that says, hey, I want to get my hands on that. So again, make sure that you have Lisa on speed dial. Can I say that, Lisa? You didn't plan on taking a lunch today, right?
Absolutely
You're just
not.
ready to take all the calls?
Yep. Yep.
Okay.
I'm here for you.
Perfect. Hey, you guys heard it. That was on a recorded line. She's here for all of us, right? And we'll take her up on that. Okay, so moving on to the VersaChoice continued, a deeper understanding of VersaChoice from what I talked about from the Ascend meeting. I had already mentioned here that last year we made the update to have the Performance Choice 8 crediting methods be identical to VersaChoice 10. And what we wanted to do is, of course, create simplicity in our product portfolio, first and foremost. Also, we wanted to enhance the accumulation play on Performance Choice 8, right? I told you, hey, we refreshed our logo, and why not refresh some of our products? And we wanted to make sure that we could offer the best short-term accumulation play possible. So mirroring the crediting methods on VersaChoice to Performance and having those on Performance Choice 8 allowed us to have the Mark 5 and the new index. So we added the Fidelity Multifactor Yield Index. This is pretty cool, you guys. So I wanted to make sure, again, that I shared with you for the non-qualified stretches and inherited IRAs. Hey, performance choice is an option for any of those, which is pretty neat. You notice that VersaChoice was an option for a couple of those. So again, wanted to make sure I did point out the simplicity that the crediting methods are the same. And what I'm going to do, I'm not going to dig into the crediting methods, the ideology, how they work. I did promise Lisa that this wouldn't be a snooze fest. That this would be relevant information that you can take with you. And I want to point out what the strategy charge looks like on a couple of the Fidelity options. And then I wanted to point out what the benefits are to diversification, meaning not putting all your eggs in one basket when you're allocating the client into just a singular crediting method, and the magic that happens when you diversify them. I've got some cool numbers to show you. So I always have the rate spotlight sheet pulled up. I always do that. That way you can see the beauty of, we'll give you the crediting methods, all of the current rates, and also all of the hypothetical projected illustrated rates. That way you don't have to run a million illustrations to see what things look like. I can appreciate sometimes the font on slides. I have to get close to the screen to read it. So what I wanted to do is blow up the crediting method options that you've got for Fidelity and Mark V, which are going to be our most popular crediting method options here. Okay, so you'll notice Fidelity, that's highlighted in yellow because I wanted to make it easy to see when you're swimming through all this data, right? So what you'll notice here for Fidelity, you've got an annual point-to-point and a 2-year point-to-point with a par rate. You also have an annual point-to-point and a 2-year point-to-point with an enhanced par rate. I know it's a popular term out there in the industry to say fee for rate, meaning that there's a charge for an enhanced par rate on those crediting methods. So we wanted to be able to offer you both options. You can have your traditional plain Jane point-to-point with a par rate, or if you wanted to explore that strategy charge with an enhanced par rate, we've got some options for you as well. So you can take a look at the hypothetical illustrated rates for the most recent 10 years, the highest and the lowest. And for me, I think it's important to be able to take a look at that and see that when it comes to volatility controlled indexes, notice that you're not seeing any huge swings here. You're not seeing anything like, oh, the lowest is a 2% and the highest is a 8%. You're going to see everything's within 2 to 3% of each other. Volatility controlled indexes do create that consistency, and I think that that's why they've been so popular. So again, you've got your S&P 500 Mark V. You also have your Fidelity Multifactor Yield Index, which has been insanely popular since we added it May of last year. And in case you guys have some questions on that strategy charge, my next slide is actually going to go through some of those most popular questions that I get, my internal wholesaler Jeff gets, and also our sales support team gets. And so I wanted to present those to you in case you're like, a strategy charge, how does this bad boy work? Well, here we go. Okay, so how and when is the strategy fee calculated? And that annual strategy charge, it's based at the beginning of the accumulation value. So we're going to take a look at the beginning term accumulation value, and that dollar amount is then deducted from the end of year accumulation value. Another way to phrase that would be at the end of your 1 year or 2 year point to point, we're going to take a look at what your accumulation value was at the beginning of the year, meaning no interest has been applied yet. We're then going to calculate what the fee is, remove it, and then we're going to apply your interest. So I think that's pretty neat. You'll see a lot out there that strategy fees are calculated after the interest is applied because you have a larger amount. Not with us. Again, that annual strategy charge, it's based on the beginning term accumulation value and then deducted. Okay, so can this charge or fee change after issue? Well, this is a pretty simple answer, right? No, it can't. So you'll notice that that absolutely cannot change once you purchase VersaChoice 10. Let me put a little side note in there, or Performance Choice 8, right? That strategy charge, it is what it is, and that cannot change. So to me, I like the fact that it's like, you know what, once you purchase it, it's locked in. And is the fee applied at death? So there is no way any of us can predict, you know what, I plan on passing away on my contract anniversary. That's just a wild way to think about something. We know that when individuals pass away, it's going to be throughout the contract year. So for us, we're not going to take out that fee pro rata like some of our competitors do. We're not going to take that fee out for that contract year.
Hey,
Also,
Tia,
this is the, yeah, sure, go ahead.
I do have a question that popped up in the box, if I may interrupt you a little
Mhm.
bit, because I do get this question asked from, some of my producers as well. And I've got someone that wants to know how the Mark V performed against the Fidelity Index. Can you touch on that, or do we have time for that?
Oh, sure, yeah. I'm assuming that we're probably not talking about 2020. We're probably talking about overall. But I tell you what, let me flip to the last slide and I can actually point that out. Um, so while you're taking a look at this slide, let me tell you, when I took a look at NAFA's volatility controlled index performance based on 2020. When I took a look at Mark V, grossly that performed over 8. When I took a look at Fidelity, grossly that performed, oh gosh, I know it was definitely over 4%. So that was the gross performance just for 2020, which that was a volatile year, right? So what you can see when you're taking a look at illustrated rates, let's take a look at the first box on this screen, that annual point-to-point with par rate, the Mark V against Fidelity. So you'll notice they have the same par rates. And so you're going to see the most recent 10 years is going to be the first illustrated rate that you see. So you're going to see on the annual point-to-point with par, what are those within 0.08% of each other. You'll take a look at the 2-year point-to-point par rate, that those are within, oh my gosh, I'm terrible at math, but those are within what, 40 some percent of each other, 50 some percent of each other. Should I get another latte? So the 0.5 or the 0.4 percent of each other, you'll notice that difference. So for me, what I like is that you're getting consistency from both because they are volatility controlled indexes. So that would be my answer based on just 2020 performance from that NAFA low volatility allocation report that they send out, and then also what we're taking a look at from an illustrated rate. So Lisa, do you feel like that answers the question?
Yeah, and I think, maybe that was 2020, talking a little bit about in the last 5 years, do we have, I mean, I know I'm putting you on the spot here, so this is something we can certainly follow back with folks on as well, if you'd like.
Well, and also too, I tell you what, that was the 2020 look back. Right here is when we're showing illustrated rates, we're showing the most recent 10 years. And then in a 20-year look back, we're showing you the highest and the lowest 10-year periods of time. There's also another great thing on the NorthAmericanCompany.com website, and that's going to be either under products or my business, but there's a tab that you can click on called Index Returns. And any of the crediting methods that we use here at North American, you can actually input a date in, and you can see the gross rate of return from all the crediting methods that we offer. So if you wanted to see 5 years ago what that looked like, we'll show you grossly what that is. So again, that I'll call it a calculator, but that calculator, it's on NorthAmericanCompany.com, and it's under index returns, and that'll show you exactly what you're looking for if you're wanting to take a look at lookbacks for a very specific period of time.
Perfect. Thanks, Tia.
Yeah, you got it. You got it. All right. Okay. So getting back to this slide, I will say I'm going to fangirl a little bit over this. So what happens if money is applied to the Fidelity fee for rate strategy and there's no index credits during the 10 years of the contract? Of course, that'll be the worst case scenario, but let's talk about another scenario. What if your index returns are less than your strategy charge, right? Your strategy charge was more than what you earned. Well, what's going to happen? Well, just so you know, VersaChoice has a true-up feature that's built in, meaning at the end of that 10 years, we're going to take a look and we're going to see, okay, what was the fee that was charged while you were allocated in Fidelity? And then what was the interest you accrued while you were allocated into that? If your fee is higher than your interest, we true you up and break you even. That way, your strategy charge was not higher than the interest you accrued during that period of time. I love that true up feature for the what if, because sometimes when you take a look at a strategy charge and it's like, hey, rain or shine, positive or a goose egg, that strategy charge is coming out when you're allocated in that crediting method, right? And so it's nice to know that you can share with your clients, hey, there is a true up feature. So if you're concerned that fee for rate, having that strategy charge to have an enhanced par rate, if you're afraid that fee will outweigh your interest credits, know that North American has your back and they've got that true up feature built in. So again, I know I fangirled over that a little bit, but wanted to tell you, man, that's awesome. And our competitors, they don't do that. They just take out the strategy charge. So for me, when I'm taking a look at this, how we calculate the fee, the fact that fee or strategy charge can't change after issue, the fact that we don't take that fee out whenever they pass away, and also the being so fair with doing that true up at the end of the 10-year period of time, again, I think that's a home run when it comes to your clients and wanting to work with North American because of the way that we're going to treat them with those features. Speaking of diversification, and Lisa, I love that someone had a question on, well, okay, let's take a look at Mark V versus Fidelity. Well, instead of I know that we weren't saying versus in a negative way. It was just, hey, let's compare the two. Well, what I wanted to do is actually pull up what it's like to put all your eggs in one basket versus allocating them within different baskets. So here's what I've done. You'll notice that the first box that has that purple allocation banner, what we've done is we've taken some of our most popular S&P crediting method options. And what we wanted to do over a period of time, we allocated 100%, put all of our eggs in one basket, just in one crediting method. And you'll notice the average annual credit along the way for each of those. And then also the percentage of interest credits that were zero. To me, the way I translate that, thinking of, okay, if I were to take my carrier hat off and my producer hat on, how many times am I going to have that zero's your hero conversation with my clients? Because, every annual review, you're basically reselling why you've offered these products within a retirement portfolio. You're reminding them, here's why we made these decisions. Here's how I helped you sleep well at night because you were worried about certain things and we were able to solve it with these products. Well, they're going to understand that zero's your hero, but if you have that conversation alive, it can kind of take the magic away from what fixed indexed annuities offer. And here's what's crazy. Anywhere from 24 to over 40% of the time, if you put all your eggs in one basket, that's how many times you're going to have to explain the zero's your hero story. That's a lot. But if you take a look under the purple allocation banner that's towards the bottom of the screen here, what if we allocated evenly between those crediting methods? Again, just using the S&P 500 options, crediting methods as an option here, you'll notice that the average annual credits are about the same when you diversified, which is pretty cool. But look at the amount of times you have to have the zero's your hero conversation, less than 10% of the time. So, an easy way to sum up this slide, would you rather try to explain to your clients why a zero is okay 24 to over 40% of the time, or would you rather just have that conversation under 10% of the time? You're going to choose under 10% of the time. And so for that, that's why it's very, very important to diversify. So taking a look at the crediting methods that are available on VersaChoice, knowing that you can allocate between Fidelity and Mark 5. You can also allocate between those par rate options and then the enhanced par rate for a fee. I mean, you can diversify between a lot of different scenarios. So again, let's trim down the amount of times that you want to say zero's your hero. So with that, kind of touching base on the VersaChoice continued, right? Just a little more information on VersaChoice. We had already talked about the accumulation potential, and we dug a little bit deeper into that, going over the magic of Fidelity. Also, the really great way that we've built in the true up feature and how we calculate that strategy charge with bringing Fidelity on. Pretty cool. So accumulation potential, we covered that. The flexibility and liquidity, I absolutely have to just real quick go over this, you guys. Again, this is first to market liquidity. You're not going to see these types of, especially the ADL benefits for a cash value wrapped up into one fixed indexed annuity. It's only in VersaChoice when you add on that ELB rider for a fee of 60 basis points, only at North American. This is the only place you'll see that. The enhanced penalty-free withdrawals, you got a base 10% available. If you don't take that, it'll enhance to 20. That maximum's 20, and it will kind of hang out there until you take a withdrawal. It'll reset back to 10. If you don't take that, of course, it'll enhance back to 20. You guys have seen enhanced penalty-free withdrawals probably a million times, right? Our return of premium feature, it's a 3-year wait, and we literally return the premium to the client and surrender the contract. There's no red tape. There's no gotchas. If they start VersaChoice with $100,000 and they add on the ELB rider, day one of the 4th contract year, they're like, oh man, I need my $100,000 back. That is literally what we'll do. Also, those ADL-based benefits, to me, here's what I think is awesome. And I believe I said this before. Other liquidity products out there tell the client, sure, we'll give you enhanced liquidity to your own money. North American said, hey, you know what? I think we can do one better on here. So once we get that one-time physician's letter in, the client can't perform 2 out of 6 ADLs. Both of these ADL-based liquidity options are unlocked for the client. We're going to waive all surrender charges. They have a fully liquid policy. They can take a little, they can take a lot, they can take the entire accumulation value, whatever they need for the what ifs, they can do it. There will be no surrender charges applied. Also, that ADL-based payout benefit, this is where you get into the carrier's pocket. Starting in the 3rd contract year, if you want a 5 pay of your accumulation value, the premium you put in and all the interest you've accrued along the way, we'll split that into 5 payments, but wait, we'll put a multiplier on top of it first, right? So that's, again, premium, interest you accrued along the way, plus our multiplier that's put on top of that. So you can walk away with more than the accumulation value over those 5 equal payments. And it's all about the what ifs. It's the flexibility that the client needs. To me, I love the fact that there's options that aren't based on their health. It's just standard liquidity options for the what ifs. And then they have enhanced liquidity, or I'll say superior enhanced liquidity once they can't perform 2 out of 6 ADLs and we get that letter in. Before I move from this slide, Lisa, one of the things I wanted to mention here is that ADL-driven liquidity, generally it's to a phantom value, right? It's to like some sort of income rider payment. It's some sort of doubler. You're only going to be able to get that for a period of time. But if you haven't turned on income, I'm sorry to be so blunt, but who cares? If you haven't turned on income, you can't use the doubler, right?
Right.
For this, there's one. Yeah, isn't that kind of crazy? Is this? It's just it's one value. It's the accumulation value. It's the cash value, and that's what your liquidity is applied to.
And your bringing up some interest on that slide there, Tia. I've got someone that wants to know if you can still use or utilize the optional enhanced liquid benefit rider on a non-qualified plan, and then does this also work on non-qualified stretch?
Yes and yes. What? How many times do you hear a carrier just tell you yes? So I'm thrilled to tell you yes. Uh, it doesn't matter if it's qualified or non-qualified. You can add on the ELB rider. And for a non-qualified stretch, we have this reminder on the state availability chart too, because I mean, I can appreciate where you guys are coming from. There's a lot of carriers and a lot of products out there. So we've got a great reminder on our state availability chart for non-qualified stretches that you can use the ELB rider. You can attach it if you want to on a non-qualified stretch. Remember, for a non-qualified stretch, it does have to be a natural owner.
Perfect, thanks.
Yeah, you got it. Okay, the nuts and bolts, we'll make it short and sweet. It's a modified single premium product. So you can put all the additional premiums you want in the first contract year. After that, you can't add any additional premiums. Wanted to remind you guys, for all the additional premiums you add during the first contract year, that does pay full commission. There's only one chassis, and it's 1010 compliant. It's a 10-year surrender charge schedule. We already talked about there's a standard 10% penalty-free withdrawal on the product. Issue ages 0 to 79. That could vary by state, so make sure you double check the state availability chart or call your IAMS family. And the minimum premium, it's going to be $20,000, qualified or non-qualified. And to close this thing out, wanted to briefly talk about our exclusive producers connection or EPC loyalty program. Long story short, this program is to help you reinvest back into your business. This additional compensation is coming from North American. So you can see we've got 3 levels here: executive, president, and chairman. And this is based on your issued FIA business during the calendar year. When I say calendar year, you might have raised an eyebrow and you're like, what? I have to qualify each year? You do. But you guys, do not worry about that because we pay retroactively. When you hit a level, we'll pay you retroactively on all of that issued first year FIA business during that calendar year. Truly all of your FIA premium counts. And I'm going to show you what that looks like on one of my next slides. We really do have a unique program here. And I do want to remind you to participate. You have to be at street or below. If you're LO to a corporation, that corporation has to be set at the appropriate level to be eligible. And if you work with a broker dealer, your BD must approve our loyalty program. And if you have questions, if your BD has approved it, feel free to reach out to either North American or your IAMS family. And I tell you what, there's so many broker dealers out there that if your IAMS family does not have that answer off the top of their head, they'll be contacting me and then they'll be contacting you back. We can get that answer to you pretty quick. Okay, so this is the slide I wanted to show you. You can take a look at the left-hand side of the screen, taking January 1st into account. You know, if you're chugging along and you hit the $1 million, the $3 million, the $5 million mark, let's just go ahead and put this vibe out there. You guys are going to crush 2021, okay? I know I'm putting that vibe out there for myself. So let's say that you absolutely crush it. If you'll notice under the 1 million, 3 million, 5 million on this slide, notice the first thing that happens when you hit those levels is a retro payment. $5,000, $15,000, $25,000 for $5 million in issued FIA business between retro payments and what you've earned between your levels. That's an additional $75,000 in your pocket to reinvest back into your business, not including your normal commissions. You guys think about the carriers that you work with. Think about how fair their products are to the benefit of the client. Like, do they have an accumulation value true up for strategy charges? Then think about how many are open to reinvest back into your business. You know, IAMS reinvest back into your business on a daily basis, but what carriers are earning your business to be able to do that too? Well, I can tell you, North American, we're ready to do that for you.
So it's
again,
a
our
double dip,
EPC loyalty.
Tia. It's a double dip. You get a little something something from IAMS and North American all at the same time for writing the same piece of business.
I can I give you your quote on that? I think that would be a beautiful email signature, Lisa. I like that verbiage. Thank you for phrasing it that way. But you're right. You know, it's like you absolutely get all the benefits of working with IAMS. You get this EPC loyalty program payment that's coming from North American's pocket, going into your pocket, again, to reinvest back into your business. So I know it's a bold statement to say, think about your carriers and are they earning your business correctly? Are they willing to reinvest back into your business? And if you hesitate, if you pause, or if the answer is no, you should start taking a look at North American. And to take a look at our product portfolio, that can be a simple call in the IAMS against our sales support team. You know, they're absolutely there to support you too and to support our IAMS family. So yeah, we're here. As I click through these gorgeous disclosure slides, Lisa, aren't these the best? I
I love them.
wanted to go ahead and toss it back to you. Were there any other questions that came up in the questions part of the toolbar? Is there anything you had for me? Are you ready for all the incoming calls you're going to get all day?
I'm so
Non-qualified stretches?
excited. Yes, because I had nothing else to do today. So this is perfect.
Perfect.
Yeah, I don't see any other questions in the queue box, but I will be following up with all of you. I'm going to send you all the information on the stretch IRAs and those handouts. I'll be sure to get those to you as well. And if you do think of something else, jot it down so that when I contact you guys, you've got it there. And if I can't answer the question, I will connect you with Miss Tia and she will reply promptly as well. So I'm going to switch the screen back over to me. And again, I want to show the, follow us link, Facebook, LinkedIn. Be sure you take advantage of that so that you can keep up to date with what's going on there in the industry. Tia, I can't thank you enough for your time. You're the best. I appreciate the business and the things that you do for our producers here at IAMS. You help us help them, and that's really what this is all about. So with that, I want to thank you all for coming. And the sake of time, looks like we're wrapping it up just a few minutes earlier. So if there's any questions, you guys jot down this number 800-255-5055. Ask for me, Lisa, or any of the marketers here at IAMS, and we would be happy to assist you. With that in mind, yeah, I'll let you go, and I hope you all have a marvelous and safe afternoon. Bye bye.